All right, quiz time. What do these 5 countries have in common? Haiti, Madagascar, China, the United States of America, and Australia. Well, close. It is an anti-money laundering answer. They all have red in their flag. They all have A in their name, and they're 5 countries yet to introduce tranche 2 anti-money laundering reforms. So they're the 5 countries left that are still to progress those changes. So that's the company we're keeping. So it's been delayed for a long time, and industry has been successful, I suppose, in delaying anti-money laundering reform for a while, but it had to happen at some point, and it will take effect on the 1st of July next year. Because if it doesn't, Australia's at risk of being grey-listed by the Financial Action Task Force, which is an international bureaucracy that regulates these types of things. So the tranche 2 reforms will affect real estate agencies, settlement agents, lawyers, accountants, and jewellers. And so property transactions, the sale of property, is a big part of that. Leasing is out of scope, so it won't affect property management, but it will affect sales. All right, so why are we doing this? What is anti-money laundering? And I suppose the most important thing about this is that money laundering enables real harm and is the result of real harm in the community. The way I think about money laundering is it's legitimising the proceeds of crime, essentially. And so we're talking about things like drug trafficking, sex trafficking, scams, fraud, child exploitation, really bad stuff, actually. And so that's why there's a role for us in collecting information to help law enforcement investigate money laundering when it happens. And when it's successful, when money laundering is successful, that money, the profits from that can then be reinvested, like any business, back into that crime or that criminal activity, so it can enable more drug trafficking. And so what money launderers try to do is take 3 steps. Get that money into the real economy, so placement, layering it, which is using complex transactions to try to hide where that money's come from, and then integrate it into the real economy so that it doesn't look like it's a criminal enterprise anymore. It looks like a legitimate business. And so real estate's an attractive kind of vehicle for that because they're high value transactions. You can put a lot of money into real estate. There's a legitimacy of property ownership and property investment in Australia. It's an Australian obsession, really, owning property. There's inconsistent oversight across jurisdictions because it's a state-based regulatory regime. Real estate holds its value really well, and you can also increase the value of property, by renovating it. And then suddenly you're a property flipper, and you're not a drug trafficker anymore. And so that's why these laws are coming into place. All right, so this is the true crime section. So the Gin money laundering ring was one of Australia's largest money laundering operations, and they washed around $10 billion worth of illegal money over a 4-year period from 2018 to 2022. They were basically operating an underground kind of Western Union where people could deposit money with shell companies in China, and then they would give them the equivalent amount of money in Australia and take a 4 to 10% kind of cut as their profit, which they would then channel back into Australia and invest into property and other assets. And so as a result of one of their companies, Tara Global, went to take out a loan, an $11 million loan to buy a commercial building in Sydney, and that raised some suspicions with National Australia Bank, was flagged, led to a surveillance operation, and then the whole thing was kind of uncovered. And as a result, millions and millions of dollars of assets were seized, including mansions, commercial buildings, $47 million worth of land near the second Sydney airport site. So significant amounts of money can come through the real estate sector. And this is, obviously most transactions aren't going to be like that, but this is why this is being introduced. And it demonstrates how criminals can combine shell companies, international finance loopholes, and local property markets to hide essentially millions or billions of dollars. not sure why they needed to take out a loan, by the way, when they had that much money, but anyway. So what these reforms will involve, real estate agencies and those other tranche 2 entities will need to do a few things. Register with AUSTRAC, and that'll open up by March next year. Appoint a compliance officer, so this needs to be a suitable person. It can be the director or a licensee or an operations manager. Develop a program at the policy level, at the agency level. And so that involves a risk assessment and documenting how you will comply with the requirements. And AUSTRAC, the regulator, will produce starter kits that can help with this by the end of this year. Ensure staff are trained and prepared. Like, it's a big change management process to have staff to have that kind of compliance mindset. And then from a day-to-day perspective, there'll be the requirement to undertake customer due diligence on sellers and buyers. And so that's a workflow process that technology companies will be able to help with, and Chez will talk about that shortly. There'll also be an obligation to report suspicious matters and to keep records for 7 years to help authorities when they need to go back and try and unpick some of the complex transactions. So advocacy around anti-money laundering has been a big focus of ours for a little while, and we have had some significant wins. And I know you're probably thinking, hang on, this all sounds like a massive pain. How are you up there telling me that you've had some advocacy wins when we have to do all this work? But we have been focusing a little bit on the customer due diligence aspect in relation to buyers, because typically selling agents don't have that kind of relationship with buyers. And so we've been really clear in all our submissions to AUSTRAC around, hey, we're not necessarily the best place to do that customer due diligence, and it would be great if we could rely on settlement agents to help. And so pleasingly, in the second iteration of the rules, which are out for consultation now, there is a reliance framework that will enable real estate agents to rely on the customer due diligence done by settlement agents if the settlement agent agrees. So in practice, that'll look like saying to the buyer, hey, I'm going to pass on the file to the settlement agent. They're going to ask you to do some customer due diligence. I'll ask them for a copy. If they say yes, happy days. If they say no, we'll have to do it as well. So I think that's a really significant win, and removes some of that duplication and enhances the client experience as well, which we'll be able to do some public education on next year as this becomes closer. We're also really pleased that AUSTRAC are going to release starter kits, which are like template policies that agencies can adopt or adapt as a starting point. And that'll have two benefits. If you adopt what AUSTRAC provides as a template, that gives you some confidence that what you're adopting is broadly correct. So that's really positive. And it's also a cost-saving exercise, saving you the time and money and effort to develop that yourself. To facilitate that, AUSTRAC have put together a small business profile, and that's around what does a typical small business in the real estate sector look like. And so to be eligible for the starter kit, you need to fit within that small business profile. And they've set that threshold at being 15 licensed agents or sales reps. So that's positive in that it covers something like 97% of our members. So most agencies will be eligible to use the starter kits. All right, lastly, just some tips and kind of learnings that I want to convey. And the conversation I probably have the most is around, you won't be responsible for stopping the deal. So if something's suspicious, it's not your job to say, hey, I can't accept your offer. I'm not sure where that money comes from. It's only your job to collect information. The deal goes through, and if it's suspicious, you report it, and then that provides that evidence base for AUSTRAC down the track. But your role is not the police. We don't stop it. And in fact, you're not even able to say to the person, hey, I'm suspicious, because that would be tipping them off. So it's just a case of information collection and then report it if there's any issues. July 2026, when this all comes into effect, whilst that is the starting line, it's also a finishing line. That's the point when you need to be ready at an agency level you need to have a policy, have a compliance officer, and have processes ready to go, because you can't sign listing agreements essentially on that day if you haven't got those in place. So July 2026 is a finishing line as well. Oops, my apologies. It's worthwhile investing in a risk-based approach up front as well, and really understanding the risk that your agency faces from a money laundering perspective. If you're dealing mostly with owner-occupiers, first home buyers, 80% financed, your risk is going to be relatively low compared to if you're dealing with multi-million-dollar transactions, owned by companies, all of those things. So the risk is that you might over-comply if you're doing mostly low-risk transactions, but you don't want to under-comply if you're doing more high-risk transactions. So consideration of your risk upfront is going to be really important. Like any change process, the compliance culture is going to be set at the top by leaders. And that's the feedback that we've had from New Zealand, that agencies where this has been most successful it's been championed by the leaders of the organisation. Communicate the why. Why are we doing this? Because money laundering is around legitimising the proceeds of crime. And so we're playing a part in collecting information to help stop that. Resource adequately in terms of the compliance officer, but also the tech partners that you get to help you with that customer due diligence workflow journey. If you can resource